5. Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, joined by Romer and Pierre Debbas, managing partners at Romer Debbas. We also have Neil Garfinkel, managing partner at Abrams Garfinkel Margolis Bergson, and finally Bess Freedman. She's back with us, CEO of Brown Harris Stevens, to discuss the state of the real estate market, the role of agents for buyers and sellers, and educating the industry. It is great to have all of you back with us. Neil, welcome to the show. Bess, I'm going to kick this off with you. Let's talk about the state of the real estate market. It seems as if the conversation really hasn't shifted that much over the past 18 months.
No, first of all, thank you for having me here today. It's great to be with everyone. Yeah, it's a tougher market. We all know that. It's a bit of a sea change. Rates have gone up tremendously. Inventory is tight in much of the United States. Sellers haven't brought their prices down. So we're feeling like it's a much slower market. And I think it's really going to take some time before we start to see fluidness in the real estate market overall. New York has good supply, but a lot of places don't. And people right now, to be honest with you, are feeling a lot of stress and angst with, even though the economy kind of looks good and we haven't hit a recession, or will we don't know. I think people are feeling a lot of strain. We're in 2 wars right now. And you know, there's a lot of malaise going on, and you feel it. And I think that impacts our market.
So it sounds like the expectation is higher interest rates for longer, is the consensus.
Yeah, I think rates are going to stay where they are for a bit. I don't see any catalyst to bring them down. A recession, that would bring rates down. And I think that would potentially help everyone. I'm not rooting for a recession, but that is one thing that I think would bring rates down.
Another thing, an election year can bring rates down as well.
There you go.
Next year's an election year. So you're going into 2024 with the real estate market, which is the backbone of our GDP, between finance, construction, and real estate transactions. If you have that segment of the economy stagnant, you're not going into an election with any upward momentum in the economy. So you almost have to bring rates down going into the election just to gain positive momentum. And I say this in a bipartisan manner. It's just basic common sense, quite frankly. So if I had to give a prediction, I would say probably late spring, early summer, you will see rates come down predominantly for that reason, because what the general society doesn't realize is that although economic stats look like it's positive, I don't see how this is a good economy. I think it's absurd.
Well, consumer spending is still, really strong. That's part of the challenge.
Yeah, well, I mean, job security is high, wages have maintained their levels, so that's all part of it. But in reality, the real estate market is such an important factor of our economy that if you will not be able to go to an election with a down market continuing this way.
And the other unknown is a global war would be also obviously a tragedy, but would also shift this whole economy. It would change everything.
That's right.
So.
Yeah. And Michael, you and I have spoken about this before, that the New York City real estate market is a very unique thing, across America. Are we still in a situation where supply is still relatively tight and you can essentially ask what you want for and buyers are snatching them up? Is it still the same environment in New York?
It's a tight market. As Bess was alluding to, it's hard to compare New York to other markets throughout the country. Throughout the country, there's a huge housing shortage. There is some inventory here in New York, but it is a unique market. It's also a destination globally and domestically where people want to come buy, not only for their homes, but for investment purposes. So it is unique. But we're dealing with an issue now too where it's an affordability crisis. An average person, a young couple with kids, it's hard for them to afford that starter apartment. And when they're looking at interest rates for mortgages at 8%, it makes it really difficult. So it's challenging. And right now people are nervous. They're worried about the economy. They're worried about what's going to happen in the next year, what's happening throughout the world. And where are people most comfortable? It's in their home, and right now people are having a hard time affording their homes.
Yeah, I mean, especially if so many people are 4% or under on their mortgages, unless you have to move.
Right.
I mean,
that's the challenge. That's why inventory has been so held up, because sellers are like, well, I'm not going to let go of this rate and then pay double. That doesn't make sense. I'll wait, and that's been holding up, sort of the housing market for a while, because
But that's not going to stop until rates come down.
That's exactly right.
I'll give you a crazy statistic. 70% of mortgages in the country are below 4%.
I saw that.
70.
That's crazy.
So how are you going to create transaction activity? Nobody's going to let go of a 3.5% rate to go for an 8% rate with pricing maintaining similar levels.
They have no place to go.
I mean, that's a house that's almost a third to nearly half of the value that you have now if you want to maintain the same mortgage payment.
But historically, keep in mind that rates are still very low. Even though 8% seems high, we have short memories, still very low. And maybe you can negotiate and get a better price. And so it kind of offsets each other. But people have this in their head. They're like, oh, the rate's too high, the rate's too high. And they're unwilling to let go of that. but part of it is just the narrative, I think.
Yeah, well, you have nearly a generation. Think about the past 10 to 15 years. I mean, we were so flush with liquidity. We got used to sub 4%.
Cheap money. It was
Right.
cheap money.
Right.
And now the market is a disciplinarian and everybody is trying to adjust to
It's been
that.
15 years of cheap money.
That's
the thing.
right.
So I keep
Right.
saying our current market valuations are predicated on low cost of debt. And it's not a cycle. It's not like a short blip. This is 15 years we've been living
Right.
like this.
Right.
This whole environment we live in is based on that.
That's
You
right.
can't reverse course this drastically. You just can't. And we're seeing you can't.
No.
One of our biggest footprints is we represent lenders doing closings. We're down 80% in terms of the amount of closings we're doing.
Well, the
to
word
give you some
refinance became an
sense.
obsolete
There is
phrase
no
in English
refinance,
language,
exactly.
right?
So,
There's none of that today.
I mean, how could you? But here's the whole thing too. I don't think we're ever going to go back to sub 3%, sub 4% interest rates. Certainly not in the near term. I mean, the whole thing is that can create another crisis in itself. If you have your home at the value that it is now at 7-8% interest rates, if that comes down, then you're underwater in equity. So I would imagine the Fed doesn't want to shift gears that quick, because then you're looking at a whole other crisis. So Bess, my question to you is, as a buyer, as a seller, does anyone have an advantage?
You know, I think, believe it or not, buyers do have an advantage because I know rates are high. Everybody knows that. Sellers know that. So they can negotiate on homes. If they see something they like, I think they can go in there and really try to offer something that's reasonable. And sellers know that they can't be ambitious in this environment. So I think that helps. And they can also think about refinancing in a period of time. Maybe it's in 2 years or whatever, so that they can bring those monthly costs down. So that is that potentially could be good. And sellers right now, look, it really depends on your situations. People don't look at the market and go, oh, I'm going to buy or sell. They look inward and say, what are my circumstances? Do I need to buy? Do I need to sell? And that determines what they do. I always say that people have to think about their own situation and make those decisions. It's never, oh, the market, then I'm going to do this. People decide for themselves. So I think people are buying and selling because of cycle of life. They have babies, they get divorced, people die, and they continue the cycle despite what's going on in the world. And then discretionary spending is something else.
Yeah, that's a great point that you make.
yeah, so I don't think it's buyer or seller. It's the one who has the flexibility to make those decisions.
Yeah, that's a great point. And Neil, I want to actually lift the curtain back on the industry here, because we see on Bravo and other entertainment channels selling in LA, selling in New York.
mean selling Sunset.
Yeah, that's it, selling Sunset, because you can tell how much I watch these things. And everyone's got a European car and they're carrying Birkins around. It's the most fabulous lifestyle ever. I don't know. It seems like a hustle to me. It doesn't seem like an easy job.
It is not an easy job. I'm broker counsel to the Real Estate Board in New York, host a legal hotline every day for their members, 6 to 10 phone calls and emails every day. I assure you, what they do is not easy. What a real estate agent does is not easy. They have to hustle. They have to know a lot about a lot of different things. It is not an easy job.
And I will say, I've said this for a long time, that the narrative that is out there, the perception that the real estate agent is the selling sunset, is so ridiculous. And I think that really hurts us, because what an agent does 7 days a week, you only get paid for results, you're working really hard, your floor plans, photos, your marketing, working with all of your colleagues. It's just paints this unfair image that you just show up with like a fancy outfit and a fancy car and you do these deals and collect these big checks. It's absolutely not what the reality is. It's not reality TV. It's like that moms would be like the Real Housewives. Like that's what being a mom is like. It's absolutely not the case. And I think it really hurts us and the perception of what real estate professionals do. They have the hustle, muscle, working every day, feeding their families, and I think it portrays a very poor picture of what we do.
Jill, these agents and brokers are working and working hard. Here in New York, imagine life without a buyer's agent.
Yeah.
The amount of work and in this day and age, there's this presumption that a buyer's agent is just the passenger in the deal. Imagine a first-time home buyer buying a home without a buyer's agent. Here in New York, and with co-ops and condos and the board applications, the amount of work that has to be done to help get buyers approved, I think buyer's agents in particular are underappreciated and undervalued in today's market.
Well, remember, they're your trusted expert. They have knowledge, they have lived experience, and they're people you rely on. Sometimes you're selling your mom's, it's an estate, your mom passed away. Sometimes, you're walking through the most important time of their life, their biggest investment. You want a trusted advisor to help you with that. That's what a buyer's agent and a seller's agent does. But again, the media does a horrible job at portraying what we do, and I think it's unfortunate.
Yeah, it used to be that the real estate agent was the party that someone would come to, a consumer would come to for information, for listings. Those listings are readily available now. So really the real estate agent now is the person who helps the consumer understand all of this information, pull it together. And it's by far, it's an emotional experience.
Emotional commodity, I would say.
And probably in most cases the biggest purchase that someone is going to make in their lifetime.
Yeah.
And so they're so important in so many different ways to that consumer, and I think it's underappreciated.
Well, it's like going to WebMD, right? Google's your doctor now. I'll tell you what, I'll look up some things on the internet, but trust me, I'm going to my GP or my specialist. I am not going. I mean, you and I moved at the same time in 2021 during the pandemic.
And Jill, my rate is 2.95%. I'm never moving
2.875.
again. Oh, you beat me.
Over under. So right. So Michael and I are not looking to move anytime soon. Besides the fact that moving is a beast.
There you go.
But I think, you know, it's always fascinating to me. Not only do you have to hustle, you eat what you kill, just like you do in trading, right, as an agent, but there's a lot of education requirements, and there's a lot of continuing ed, and there is, I mean, it's just like being, you know, a licensed person in the stock market. It doesn't stop just because you get your license. Am I correct, Neil?
Correct. So real estate licensees in New York have to take 22.5 hours of CE credits every 2 years, and it runs the gamut from ethics and business ethics to agency, the importance of agency, to fair housing, and then electives. So yeah, and it's important. It's important because the laws are constantly changing and they're complex, and there is an expectation that they will understand these laws.
Right, and Michael, the reason I brought up you and I moving at the same time, the point was that I could not imagine doing this without an agent, without my attorney basically directing me to all the different areas where I needed to go, especially title, which is always so much fun. But you have a new program that the three of you have instituted. Tell us more about that and how agents can leverage this.
Well, Neil, Pierre, and I came together to form an online real estate education platform called Real Estate Center for Success. And what it was a combination of two pre-existing platforms. One was New York Real Estate Center, which was built by my legal partner here with Romer Debbas. It was New York Real Estate Center. Neil founded the Toolbox for Real Estate Agent Success, which was a great platform for the agent community. And we really wanted to join forces because what we found was missing in the real estate brokerage community was a platform where agents and brokers can really learn from New York professionals. Folks that they know and recognize, and not only just lawyers like ourselves, but folks on the brokerage side, folks on the lending side, on the appraisal side, the engineering side, to really get firsthand experience, because we found that education, the way the system was set up, agents weren't really getting the practical advice. I remember in law school, I remember graduating law school feeling like I didn't really learn how to be a lawyer, right? And I felt, and that's the best comparison I could make, because it basically became so generic that I don't think the agent community was really receiving that hands-on practical experience. And we're hoping that we're coming in now with our platform to fill the void, with fair housing really being the lead, right, Neil?
Yeah, so fair housing is obviously an important issue. Maybe the most important issue that we're facing as a real estate agent today. The laws are changing, they're complex, and they're important. So source of income is a protected class in New York. The concept is that every source of income should be considered when qualifying someone. Included in source of income is vouchers and rental subsidies, which are extremely important to the marketplace and can be lifesavers. So but they are complex. There's lots of different programs. We spend a lot of time training on that to make sure that the laws are complied with on both sides, quite frankly, making sure that the programs work, which is really important.
Well, if it's complex for attorneys, I would imagine for the buyers and the sellers, it's even more challenging.
And the agents, the beauty of this is that for the agents, this allows them, as you said, practical training and understanding, and it never stops. It's a living thing. It's changing all the time. It's like when you have a law degree, it's the same thing. You have to constantly, and so this is really helpful. We're grateful to everyone here because they help our agents stay up to date and educated, and doing things the right way. You need laws. It keeps a society civil and decent, and we're grateful for everybody here, what you do.
Thank you, Bess.
So Jill, and thank you, Bess. So one of the things that we do, that we have a 3-hour fair housing class that I teach. I spend a lot of time teaching fair housing. We offer that to anyone for free. So they can take that 3-hour class, they can get their 3 hours of continuing education, and we feel really strongly about that. And then we will follow it up with I'll do an hour training after that if they have any questions, because we, again, feel so strongly about the importance of all of these programs, but particularly complying with fair housing laws.
I want to go off the beaten path here for a moment. Speaking of fair housing, it triggered something that I've been following in the financial media over the past week or two about the impact of Airbnbs and Verbos and so forth on the ability to find fair and affordable housing in New York or other populated cities such as LA. Have you noticed home sharing services such as that impact the real estate market overall, particularly in New York because it's such a big destination?
So, I mean, I haven't anecdotally seen that change. We've been reading about it, and really, and it's just been instituted recently. So I don't think we've been able to ascertain kind of how that's going to change one way or the other. I don't know if anyone else.
Yeah, I feel the same way. I've been reading about it, but I haven't actually seen an impact. So
and it just, it was probably a month old. So I don't know that we've been able to analyze exactly how that's going to impact the market.
I think it'll be interesting to see how that plays out because they kept using, fair housing, and of course there was anecdotal, comments in there about how it's pushed up certain rents in this part of the city and pricing in this part of the city because people are using them as investment vehicles, and which was interesting to me because I'm like, wait, this is a city of co-ops. And it's not easy to pass the board.
I do think, generally speaking, it's going to impact the other parts of the country more than New York City because our buildings here have more stringent rules than anywhere else in the country. So, a condominium building that allows sublets will have a requirement that the lease has to be a one-year term. So it's not easy to have transient occupancy in a lot of these buildings. Like we represent a lot of buildings, and we'll write these rules, and we'll prohibit transient occupancy through, the condo declaration stating that there has to be a one-year term in a lease. So that way Airbnb won't be possible in majority of buildings in New York City.
It won't happen. I mean, everybody, for example, I live in a building, a high-rise, 35 floors. I know everybody in my building. If there was some person that came in for a month, everybody would object, the board would have a problem. So that's not going to, less inclined to happen, as you say, Pierre, in New York City. More in the outer boroughs and, single-family stuff.
All right, and as we think about wrapping up here, anything else about the real estate market, whether we're thinking locally in New York or nationally that, the audience should be aware of?
I think, think of real estate as a long-term investment. It's probably your best investment ever. It's not like a stock where you just buy it. It's one of those things that's, you have your family, you have a family, you raise them there. It's where everybody gathers. It's something that it's for the long term, and it's probably the best investment that anybody can make. And it's also, it's your home. It's where you sleep. It's one of those things. You can't live in your stock portfolio, but you can live in your home, and it's a special place. And I'm not just talking my book. I owned before I was even in real estate, and so I think it's just such an important thing. And it's the American dream. It really is.
It should be encouraged and incentivized.
Should be.
Owning a home. And you look in today's day and age when you have the likes of huge hedge funds, being the largest owners of single-family homes throughout the country. How does that not add to the housing crisis?
It's alarming.
It really should be incentivized and discouraged for the hedge funds to really be going down that road and really encourage the homeowners to actually take real estate back.
Yeah, no, I mean, we always say we don't want to fast forward 10 years from now and everybody's renting from Goldman Sachs.
Right.
It'd be a disaster, right? Like, I mean, it is a problem because...
Not at 2.95% either.
Yeah, exactly. And when you really look at it, it is for a majority of Americans, buying a home is your only way of building wealth in your lifetime and building equity. So if you lose that ability, it would be disastrous for society. And I think that even before the interest rate hikes, we had a shortage of supply. That's why prices went up so quickly. And there's even a more drastic shortage of supply right now. So this market, you're not going to see valuations come down. If people are waiting like, oh, prices will come down 33% because of rates, keep waiting. Because in reality, the biggest issue in the market is lack of supply. And talking nationally.
100%.
That's right.
Yeah, so I like to say, buy with your head and your heart. Particularly if you're buying your home, think more about your heart than your head. You shouldn't be thinking about what you're going to sell for 10 years from now. That's not why you're buying this particular property.
Yeah, and Michael, even before COVID, you and I have discussed this a number of times on the show about hedge funds buying up properties, and they typically tend to be, first-time home buyers at $300,000-$400,000 range. It blows my mind that there hasn't been any sort of organized action to stymie this. I'm sure we're all well aware of the reasons why, but that American dream will never be realized.
It's adding to the problem. It really is, and our hope is that it gets better. We want this inventory to increase throughout the country so there's more homes available, which will ultimately level off the pricing a bit. But right now, we're not seeing that happen anytime soon.
Not enough, but I don't want home buyers to get discouraged in this environment, because even in this environment, just like the pandemic, there's opportunity. In a crisis, in a challenging time, there's always opportunity. The people that jump in during this time could potentially reap the biggest benefit.
And who knows the opportunity better than the agent or broker?
That's
and
right.
Just to bring this full circle, that's really the real value. And it's really important for prospective homeowners to work with professionals that know the market, know the industry, work with attorneys who know it as well, because that buyer needs to be represented to get a fair deal. And that's ultimately what's most important.
Amen to that.
Right, and why the agents need to be educated and on top of all the latest developments. Appreciate the insight
you,
from our panel
Jill.
this afternoon. Thanks for joining us on Trade Talks. And thanks for
Jill.
joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.